Hey everybody, Real Estate Ninja here. I hope you're doing well. We're going to talk about the crash that nobody sees. Everybody's diving in, what we're experiencing, and we're going to use Home Depot and Walmart as an example. Home Depot just came out and beat earnings. Crazy, right? But we're actually in a crash. I know it's hard for so many people to understand and believe, but that is what a crash feels like. But this one is different. This is much different and much bigger than the Great Financial Crisis because we have inflation like we did in the late 70s. And that is causing people to dive into certain things to be able to get yield. I talked about this a couple of years ago, where I said people are going to start to be starved for yield as rates go higher, as costs get higher, right? Inflation. So you have two things, a double whammy, because you have inflation going up, then the Fed acts, and in the first beginning of that wave, as they start to raise rate, then prices go up exponentially, because not only do you have the average normal inflationary area that's going on, now you have even more inflation because the cost of borrowing is going up. And before the masses figured out they could see it, those costs are stacked on top of the inflation until ultimately it gets so crazy, so high, it crushes the consumer, all right? We're actually seeing the consumer being crushed right now, yet the stock market goes up. People do not understand how this works. This happened during the roaring 20s. It's so exciting to see because it's so easy to figure it out, because the farther you look back in history, the farther you get to look into the future, right? But people don't get it. Now check this out. We're gonna talk about Walmart earnings, but I wanna stress this again. Home Depot beat earnings. Earnings are the bar has been getting set lower and lower and lower for the last year and a half. I keep reporting on it. And yet then they come out and you've heard probably the type one, if you've heard this, where bad news is good news. It's when the market completely dislocates. And that happened about a year and a half ago. The market just completely goes, we're going crazy. We're going to crazy town. And bad news actually turns into good news. Because what happens is there's so much bad news when the news isn't so bad, people get excited. Traders get excited. We saw the other day where an algorithm went nuts, I think, or something with NVIDIA. And the algorithm that trades these stocks, that push the flow of money in and out of an equity, got it wrong based off of a typo from a news story. And they traded on that. And there was a bunch of money put into a stock, and then there's a pullback. You have to understand that these markets are fake. I am not personally, we're at right now 36,000 on Dow, right? All-time high. I believe that you could actually see a 42,000 Dow before it starts to turn negative. Why? And just so you know, I am not in index funds. I think they are toxic crap, where you have all these YouTubers, these young people that have never seen a crash. They weren't even in high school, most of them, during the Great Financial Crisis. They've never seen a downturn ever. They've never seen inflation ever. And they're selling everybody on a pile of garbage. Index funds that have no assets in most of them. It's based off of a derivative, which most of these financial YouTubers couldn't even explain what a derivative is. Here, I'll tell you what it is. It's an insurance policy. A bank comes out and says, and not all banks do this, but most of them do. They come out, or investment houses, they go, we're gonna sell you an index fund, and it's gonna be an index that's tied to the value of the S&P. There ain't no S&P stocks in there. As a matter of fact, most people and financial YouTubers don't even know what a street name recognition is. Holy cow, you don't even own the stock. But let's go back to index funds. Index funds, they go, we're gonna sell you something that's tied to the value of the S&P 500, and just give us your money. And if the S&P 500 goes up, your shares go up. And your shares are vaporware. There's nothing there. But they pulled an insurance policy. And an insurance policy, but just like homeowners insurance, or I'm sorry, title insurance, you are forced by law to pay that, and it ain't even there for your benefit, it's there for the lender's benefit. The lender makes you buy it, but it's for their benefit if you default. Then they get paid out, then they come take your house. How do you like that? But hey, in the world of finance, 99% of the people, especially those that work at a bank, don't understand how this works. We are in crazy town. So what's happening is the markets are going up because there are a bunch of people starved for yield, so they're diving in. So you have a situation where there are more buyers than sellers. The common man and woman are diving in while the billionaires are walking away. Jamie Dimon, Jeff Bezos, Warren Buffett. When I said, a year and a half ago, I said, watch, Warren Buffett's gonna start liquidating his stuff. I got so much hate Why? Because all the other finance channels, all the finance YouTubers out there that are super fancy and have all this editing and they look like they're really smart, but you're gonna find out one day they're not. Even look at Grant Cardone. Insulting you, saying if you don't make $400,000 a year, you should be embarrassed yourself. He's taking your, oh man, you're gonna find out one day. These people, they're all smart, are selling you a pack of lies. But just like the great financial crisis, a lot of people understood what a derivative is. They've already forgotten. Why? Because they're retired now. They're sitting back, enjoying their retirement. They've already forgotten the homes they lost, the value they lost when 50% of the stock market was taken out. They've already lost it. They don't understand it. They don't remember it. It's crazy how people just forget. So you have the value of the stock market going up. I'm not in any index funds. I have no stocks that are really, other than some precious metals stuff, because I'm playing a game of cat and mouse with the dollar and the gold and silver price. That's all I have, because the bottom's going to drop out. And this is the proof that the bottom's going to drop out. Check this out. So we told you Home Depot has already been warning about a softer consumer, that they're only doing necessities, but they beat earnings, and the earnings bar has been set very low. I've done videos on the other channel, Economic Ninja, where I actually went out and I pulled the earnings report from 2005, 2006, 2007, 2008, and then 2009, and showed you the exact same verbiage in each one of those during a cycle of earnings, a multi-year cycle of earnings from Home Depot, which tells you the strength of the housing market. Well, Walmart tells you the strength of the average consumer, right? So we've seen this, we've reported on this. Well, look at this today. Walmart hits record high after earnings beat, despite, this is very important to understand, despite guidance, despite soft guidance and warning about consumers spending less. It says Walmart shares hit new all-time high after the largest bricks and mortar retailer reported earnings that beat expectations, despite providing guidance that was marginally softer, and choosy shoppers nevertheless kept buying in its stores. So it goes over all the stuff, right? It says of all the data, the percentages, I'm not going to bore you with that. Of the metrics reported, however, the most important one is that Walmart's same store sales rose 4% year over year for US stores. Wall Street was expecting 3.1%, so the number was clearly a beat and was driven by strength in grocery, health, and wellness. Okay, I want you to understand that. The strength is in necessities. Necessities. Grocery, health, and wellness. It's not in consumer electronics. It's not in furniture. It's not in Christmas decorations. It's in necessities. What they're not telling you also is that there are more shoppers that were shopping at Target last year that are now shopping at Walmart. That's proven through Target's earnings. And even Walmart stated it. They're gaining market share. They're taking a higher level of spender that goes to Target. This is a real thing that people don't know. They don't tell you this stuff in the news. And they're absorbing them because their prices are on average lower than Target's, right? Type 1 if you agree with this. You understand the difference between Walmart and Target shoppers and Walmart and Target items and their prices. Type 2 if you're like, I don't, the ninja's just making crap up. Because you got to have one or the other, right? So they're not telling you that, all right? So now they sit there and they tell you, let's go to here we go. Discussing the quarter, CEO Doug McMillon of Walmart said that we crossed the 100 billion in e-commerce sales and drove share gains to our customer metrics improved even during our highest volume days leading to the holidays. Okay, now commenting on customer selectivity, CFO John Rainey said they are being choiceful. See, I want you to remember that when the CEO and the CFO of a company like Walmart release earnings, sorry, I got to get something to drink. They have to be very careful with their words because they want the stock to pump. You see, they want to sell you their share. They want to sell you more shares at higher prices. Okay? They don't want to alarm you. So they've got to tell you the bad news with a spoonful of sugar. It's the Mary Poppins way. They say this, they are being choiceful as consumers continue to spend less per trip but have been shopping frequently, adding that the company expects some resilience to continue for the rest of the year. So they love to say that. We expect some resilience. So they're telling you right now, if the consumer is spending less, they have less money to spend, they are being more careful, things are not good. But they're legally allowed to say, but we expect, we hope, we encourage. That's their way of saying legally, without you being able to sue them, please keep buying our stock. See, this is what happens. I would not be surprised if you see the Dow Jones at 42,000. Probably because of a resistance point, technical analysis. Many people better than that than me. I'm not investing for that little gain. I look at gold right now. I look at silver price, despite everything that's happening, and I just can't believe the floor those prices have put in right now before the masses figure it out that things are going bad. The cash sitting on the side that I have, I feel pretty confident in. My rate of return based off the 10-year bond, the 30-day bond, I'm happy with. While you've got all these people in the mainstream media and social media just absolutely crushing it. You want to know why? It's because what they're doing is they're selling everyone a false bill of goods. While they make $10 million a year peddling index funds, it's not going to matter to them if they're 100% wrong. Their bank account doesn't care. And there are so many people, just like the Roaring 20s, the lead up to the great financial crisis, and even the lead up to the .com bust, that will be completely taken out because they will be caught totally unaware. Inflation rose in late 70s. Inflation rose in the 20s. People dove into the markets. When inflation was rising in Venezuela a handful of years ago, the stock market was going up 1,000% a year. It didn't keep up with the cost of food. Right now, you have the cost of food still rising at a higher rate than index funds going up in the stock market. We're in the beginning throes of a mini hyperinflation. That's why I'm confident when credit markets, and they're already contracting. The Federal Reserve is already contracting. We are already in a bailout right now situation where the FDIC last year had to start bailing out banks. They didn't bail out shareholders. They bailed out the depositors. The FDIC did that. The Federal Reserve was bailing out, and it has been bailing out the banks by providing them liquidity just to keep their doors open. We've already started a wave of epic bank failures in 2023 that have already rivaled what happened in 2008. And now we're going to see something even bigger this year in 2024, especially leading up to and right after the election. There are some people that have a lot of money, and I don't think you understand this. They don't care if their portfolio goes down by 50% if yours goes down by 100. Please understand that. See, most humans don't understand that. Why would they do that if it's going to hurt them? Well, you have to understand, they understand one very serious principle that I've been trying to teach for a long time. During a crash, it's not about how much you lose. It's about how much you hold on to compared to everyone else that lost everything. Because then you turn around and you go buy up and you own everything they had. That's the message. That's how you're going to absolutely dominate it in this next real estate crisis. You know, people that are fools, they're morons, they're complete straight up tools. Use that whole analogy, well, even a broken clock's right twice. Well, you're an idiot because I'm that broken clock. Good news, the ninja's the broken clock. And the 2 times that I'm right, woo, going to absolutely crush it. Bet against me if you think that's wrong. That's all I got to say. We're going to absolutely crush it. Walmart and Home Depot, 2 huge signs in the market, both in the real estate sector and in the consumer spending sector. Beat earnings because they lowered their guidance multiple times. They told you the truth. The consumer is soft. The consumer is spending less. The consumer is being choiceful or careful. And their stock, all the little minions around the world that are buying up shares and enjoying their 8% or 10% returns in a year, maybe even 15. They're buying based off of algorithm tradings while big boys are liquidating. They're selling their stock. Look at Jeff Bezos. Look at Jamie Dimon and watch Warren Buffett. You watch what those three are doing. And it tells you. But here's the sad thing most people do. I tell you ahead of time. The public only gets to see what they do 3 months into the past. And if you look at what they've been doing the last year and a half, that's going to show you what they're doing in the next 3 months to a year from now. But even in a bigger way. Guys, if anybody wants the side hustle course, there's only like 3 days left. I think it ends on Saturday, the price, the $199 price. After that, it goes up. It's time to start taking the bull by the horns. It's time to start a side hustle. It's time to get some more cash, because if you want to buy more Bitcoin, silver, gold, have some more cash on the side, you need to have a side hustle. You need to take advantage of this amazing opportunity. While everyone else is looking this way, you're going to go this way, and you're going to come right around the side of them. You're going to flank them and crush them. That's it. We're going to try and warn as many people as we can, but history is a pretty good indicator that not everyone's going to listen. All right, that being said, the Real Estate Ninja is out.